and today we're talking about the market structure. We're talking about the market structure. Um, Before analyzing, you need to first of all know the market structure. Now, what do I mean by the market structure? I mean by market structure is the trend of the market. You need to know where the market is coming from and where the market is going to. So it is very, very important. When you don't know where the market is even coming from, you can't even anticipate where it is going to, because it is where it is coming from that will tell you, okay, market is coming either all the way up, moving down, right? Then you will know, okay, if you should be looking forward for a sell opportunity, or you can know if the market is moving from the down part to the upside, which is an uptrend, for you to know if you should be looking for a buying opportunity. That is why market structure is very, very important, because it is not just like the basics of your trading, just like the basics of your trading. Because when you don't understand market structure, that is where you find it difficult to analyze the market, and you can't even look for places to take entry. So one of the most important aspect of trading is for you to know your market structure. And in market structure, we have the uptrend, we have the downtrend, we have the uptrend, we have the downtrend, we have the ranging market. And all these are three different structures. There are three different market structures that you need to be familiar with. Now, I most of us have been going through the course that Jeremiah posted, and you can see him talking about market structure. But if you are not, if you don't, and if you are new to the forex world, you might not really understand the concept is talking about, because you actually need to um you need to you need somebody to guide you. You need somebody to show you, to guide you how these things is. Because if you are new to the industry, or you are still a newbie, you might not really know how to analyze the market like that. So your analysis is very, very important. How you analyze the market is very, very important, because if you analyze wrongly, you will take wrong trade, right? So your analysis is the most, okay, not the most, but one of the most vital aspects of forex trading. Because if you don't know how to analyze, if you don't understand market structure, you don't know if market is a downtrend or market is a buy trend, an uptrend. You definitely will not make the right trade, because in an uptrend you should look for what a buying opportunity, while in a downtrend you should look for what a selling opportunity. Now, if you are meant to be looking for a selling opportunity and you are even looking out for a buy opportunity, there's a high tendency that you'll be trading against the trend. And in the forex world, we always say, don't trade against the trend. Don't trade against the trend. Now, look at it this way: you must follow the trend. If market is going down, you must go down with it. If market is moving up, you must move up with it. If you trade against the trend, then definitely you'll be in for a loss. Now, there are situations whereby you trade against the trend. Yeah, there are patterns that you identify, and you say, and you see it, you know that yes, that this market is going to maybe buy or sell against the trend, but not against the general trend. Because there's a general trend, and there's a current trend. There's a general trend, there's a current trend. Now, the general trend might be a sell, the general trend might be a downtrend, and the current trend might be an uptrend. Now, what do I mean by general trend and current trend? When we are doing analysis, we call it what the top-down analysis, whereby you need to start from the higher time frame, then you go to the lower time frames. That is, use the lower time frames to checkmate the higher time frames. Now, with you, my mentor taught me in trading, in mentorship school, when you analyze from the top, which is from the weekly, or most preferably from the daily, but it's also still useful if you go to the weekly, because the weekly will tell you, okay, this is the general trend of the market. It's a sell. We'll still dive into the chart. I'm still going to share the screen, but I just want to lay this foundation first so that we can understand. Now, if you have to analyze, most people go and start analyzing from the lower time frame. That is absolutely wrong. You don't analyze from the lower time frame. You see, that's where you get a lot of stop losses, because the lower time frame is just giving you a smaller view of what is happening in the market. So instead of you staying, let's say for example, now you want to see a large landscape, right? If you want to see a large landscape, it is better you climb maybe a two-story building or a three-story building, because when you're in that two or three-story building, you can see broader, you can see clearer, right? But if you are in a plain level, you can't see beyond that plain level, right? So that is very important, that whenever you want to analyze, you start from your weekly. There are some charts that you don't really need to start from weekly. You might start from the daily, because if you start from the weekly, it is going to really mess up the chart. It's really going to mess up the chart. You need to start from maybe the daily, depending on the market and depending on the formation of the general market. There are some market that you don't even need to start from the daily time frame. Just start from the 4 hours time frame. But generally, it is better you have your view from the weekly, because the market obeys what the higher time frame is talking about. The market obeys what was the higher time frame is talking about, or the market obeys what the general move of the market. The current trend might be an uptrend, while the general trend is a downtrend. Now, that current trend, which is an uptrend, it will get to a point whereby it will still, start aligning itself with general trend, which is a sell. Now, let's say we have the general trend as a sell, a downtrend, and we have the current trend as an uptrend. Now, you see that uptrend or that current trend might serve as a pullback. Now, most people might take trade. You can take trade from the pullbacks, but you have it in mind that it is a kind of a scalping trade. It's not a trade you. It's not a trade that you leave for um, days or for long, depending on where you took the trade. But irrespective of that, there are still some trade that you can take, and even if it is a pullback, you can still take it for days. But that it is very, very risky, because those kind of trade, you don't really know where the markets can start again moving with the general trend. It is very, very important that when you are trading, the best um, time frame to use to start with is your weekly. Because when you have it in mind that, okay, the weekly is saying it's a sell, right? Then you know that, okay, if the weekly is saying it's a sell, that is the general trend. And that is where most traders will be looking at the weekly, the daily. Those are the higher time frame. Now, higher time frames are divided into, time frames are divided into higher time frame, have the intermediate, and then we have the lower time frames. Now, the lower time frames are mostly for picking entries. The lower time frames are mostly for picking entries. You see a lot of traders say sniper entry, sniper entry. They don't pick sniper entry from the 1 hour time frame or from 30-minute time frame. Most of these sniper entries are picked from 5 minutes, 10 minutes, or 1 minute. Yeah, that is where they pick these sniper entries. Now, like I was saying, that if you want to analyze, you start from your higher time frame, the weekly, the daily, and the 4 hours. Then 1 hour is still included, but for me, I don't really consider the 1 hour, because it's not that strong like that. Unlike the 4 hours, the daily, understand? So when you want to analyze, first of all, take a look at the chart from the weekly time frame. When you look at the weekly time frame, I think we can probably maybe we might dive into the chart right now so that I will explain better what I'm saying. All right, so when we talk about analysis, top-down analysis, so most traders talk about top-down analysis. Most traders talk about the top-down analysis. Now, when we talk about the top-down analysis, like I said, you need to start from the higher time frame. When you start from the higher time frame, sorry, please hold on. When you start from the higher time frame, when you start from the higher time frame, okay, looks like you can't see my chart. Okay, looks like you can't see my chart. Looks like you can't see my chart. Why is this thing not showing charts? Okay, I think I need a different. I think I need a different. I think I need a different software for this because I don't know. Okay, sorry. Hmm. All right. I don't know if you can see the screen. If you can see the screen, please just notify me you can see the screen. So, like I was saying, when you're starting, you start from the higher time frame. It is very, 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 very important because when you start from the lower time frame, that is where you've missed it. That is where you've missed it. That's where you've missed it because everything responds to the higher time frame. Everything is responds to the higher time frame. All analysis responds to the higher time frame. And when you start with higher time frame, okay, you have to mind that okay, the market is general trend of the market is a sell. And if the general trend of the market is a sell, that means you should be looking out for sell. Because why? Because it's a general trend. Now, because it's a general trend, you should look out for more for a swing trade and not for scalping because most people scalp and because they scalp they don't really make much but that's only scalping that really gives you much if you know what you're doing and if you're taking a trade from the sniper entry if you know what you're doing yes you can actually make more money from scalping but where there's money is in the swing trade in the swing trade you are following the general trend of the market. You know, in that kind of trend, you have in that kind of trade, you have this that's a peace of mind because you know that okay, the general trend is a sell. That means it is going to sell for a long time. But when you are trading against a major trend, it is really going to affect you because in the long run, you tend to lose. Or will I say if you don't know where to put your TPs, the trade at a point will get to reverse and it's going to end you upwards in stop losses. That's why it is very, very important that we know how to analyze. You know, when I knew how to analyze, that was the first point that my life changed in first trading because everything is centered on how you analyze. But when you analyze and you're analyzing wrongly, you will fail. Yes, you will fail. Because when you should be seeing a buyer, you might be seeing a sell. And the moment you take that trade, you know that definitely, if you don't analyze it well, you will have losses. It is inevitable you have losses. But if you analyze that trade well, the way it's supposed to be analyzed, because most people think maybe they can analyze until you now show them how to analyze. They're not like, oh, so I've been doing this thing wrong way before. It is only when you know how to analyze properly that is when you are going to start becoming profitable on trades. Now, like I was saying earlier on, that you start with from your higher time frame. And when you start from your higher time frame, you move down to the lower time frame. everything will still be explained in the chart. But I'm just giving you this just giving this orientation so that you will know that everything starts from the higher time frame. Most traders will tell you top-down analysis. It is called top-down analysis. You don't start from the lower time frame and start analyzing. That's where people get it wrongly. You start from the higher time frame. Now, for you to start from the higher time frame, I told you from weekly or from daily. The 4 hours, they are they are more solid. Yes, they are more solid. The weekly, the daily, and the 4 hours, they are more solid time frames that you can trust. Not yes, you can trust. Let me use that word can trust because they are more solid than the 1 hour. For me, I would say the 1 hour and the 30 minutes should be an intermediate, but the 1 hour is still considered as a higher time frame. Then the intermediate is the 30 minutes time frame. Then the long time frames are the 15 minutes, the 5 minutes, and the 1 minute. Those are the lower time frames. The 15 minutes, the 15 minutes, the 5 minutes, and the 1 minute time frame. That is where you pick your entries from. That is where you pick your entries from. Now, like I was saying, that the lower time frames are meant for entries. The lower time frames are meant for entries. So you only pick entries from lower time frames. You only pick entries from lower time frames. And why is here people say sniper, sniper, like I've said earlier on, that it is because they're taking the trade from a lower time frame. Now, there was a trade that I saw, but I didn't take it because I saw it late. You know, when you're taking your trades from your higher time frame, your stop losses are going to be far. The stop losses are going to be far. That is why it is recommended that when you take it from the lower time frame, and that lower time frame gives you, a bit of low or very good risk management. It gives very good risk management. That's why you see those trades that I took that I was taking account. It's because I was taking my entry from the lower time frame. It is when you pick your entry from the lower time frame that is where you are going to have you can flip and where you can easily risk little. Yes, you can easily risk little. You see some traders, you see them flipping $50. Like my mentor when he started, he was always flipping $50 to 1,000. And you might think this thing are not possible, they are 100% possible. You can flip 50 to as in fact that's just if you get the right knowledge and you know what you are doing. That's why like I usually say that if some most people say you need four frames. Okay, like today now I said I'll talk about four frames. Some will tell you need four frames. Four frames um is just is there to actually help traders that don't have the capital to trade, but they have the knowledge. The key thing there is that they have the knowledge. Because if they give you problem of 10,000 naira or $10,000, sorry, you can still end up blowing it. It's not a matter of because you have huge capital. Because you have huge capital does not necessarily mean that you are a good trader. In fact, what makes you a good trader is when you can even trade with little. Yes. When you can trade with $50, you can trade with $100, you can trade with $30. That is what even makes you a trader. Because if you cannot trade those ones, if you cannot flip those ones, I'm not really saying that every trader must know how to flip, but it's just that when you have those small capitals, it makes you conscious, and it makes you conscious and safeguard that capital. You understand? But when you give somebody who doesn't know how to trade, you give them $10,000, they'll still do it because they don't know how to trade. That's just the bottom line. Most people that even pay for poor fame, they end up blowing that poor fame. And the reason why poor fame doesn't really help you, not say if it doesn't really help you, if you're a good trader, poor fame is going to help you a lot. if you are not a good trader, you have difficulty. You have difficulty. Why? Because um because it is not actually your money. The money that you're using to trade, you've already bought the profit account. You've already bought the profit account. So it's not really your money. But when you're trading with your own personal money, the one that you know that this money you work for it. Understand? Ehen. When you lose that money, you will feel it. But when you buy an account of let's say $3,000 with just $59 and you end up blowing the account, you don't really feel it like the poor people are feeling it because the poor people know that it's their money. This problem that we are talking about, it is individual business. So if you are losing, you are losing somebody's real money. So you might not really feel, the pain of losing that money because to you feel you are just throwing away $59. Why the poor firms are losing the main capital. That's why most of these poor firms, in quotes, some don't even pay because people are wrecking the business down. Yes, people are wrecking the business down because poor firms is an avenue to help traders that are knowledgeable. That is the key word there. Traders that are knowledgeable to trade and make money for themselves, not ones that don't know how to trade. You don't use problem to start testing or to know if you know how to trade. No. Firms are used what are there platform that gives you the privilege to trade and make profit. I think that was one of the reasons why my mentor had to shut down his problem because a lot of people don't know how to trade and they are going to problem. Problem is somebody's money. If you don't know how to trade, I will not advise you go for problem. It's even better you even use a demo account for some time. But I really used to say this thing. Even if you are making profit from the demo account, you are making 1,000, 5,000 from the demo account. In fact, you're making 50,000 from the demo account. You are not yet a trader. What makes you a trader? Even if you are making $50 from a real account, it is even much appreciated than when you're making 5,000 from a demo account because when you make that profit from a real account, you are happy. You know that okay, this is what I did to make this money. But no matter how we want to quote or sugarcoat this demo trading, this can never be compared to real account. You see a lot of people, if they show you their demo account, they can show you like $100,000 that they've raised. You understand? But when it comes to real account, you see that is where the game changes. That's what gives you a different um a different ball game entirely. Because in a demo account, you can even take trade and leave the trade for weeks. You don't feel it. You can leave it for weeks, and maybe after a week or 2 weeks, then you now come and post the profit. Oh, I've made about 2,000 or 5,000 or $10,000. But it is not like the account. When you trade money to a V account, you know that it is difficult to leave a trade for even a full day.